What is up, guys? It is Joe Caruso here, and in this video, I want to go over the break and retest of the 50 moving average trade setup that I take. Now, I would coin this as a signature setup that I take, and I'm going to tell you exactly the information that you need to know in order to take this setup, when it's valid, when it's not valid, and what exactly you're looking for. So to start off, I'm going to go by going over the process of what the trade really is. A break and retest of the 50 moving average is a trade I prefer to take on the 4-hour. Now, the rules that go into this are anytime you're trading without the TDI or without any TDI confluence, because as a lot of you guys know, the TDI is a very important factor in the strategy that I trade. So when you're not using the TDI, you have to make sure that that trade lines up really well. So in order to take the trade off the 50 moving average on the 4-hour, that is not hidden divergence. Again, it does not always have, this trade will not have TDI confluence on the 4-hour. It may have shark fin or divergence on the 1-hour, the 30-minute, the 15, the 5. It looks great if it does, but it's not very important whether it does or not. This is simply a higher time frame continuation and a trend reversal trade. The great news is that you're not trying to guess the low. You are catching the continuation after the trend has flipped, and you're getting in at the earliest possible spot, which is what makes this trade setup work out so well. And it has such a high probability of playing out, a high win rate, pretty good risk to reward on just about every one of these trades. I'm getting between a 1 to 3 and a 1 to 5, depending on the daily or weekly moving averages, because that's where the take profit of the move generally is. You're targeting, if you're getting in at the 4-hour 50, you are typically targeting either the 4-hour 200 moving average or the daily 50, based on what other confluences you had. So for this example, now we'll roll into a Euro USD trade that I took earlier this week. So going into the breakdown of what was going on this trade and why I was even looking for a buy, I noted that on the monthly time frame, we were at a significant level. Support that held up several times in the past. We saw in 2015, 2016, 2017. We saw this area used in 22 and 23. So this area is very well respected. And you could note how whether an area is powerful or not based on what type of reaction happened every time price hit this area. It hit, big reaction, hit, big reaction, hit, complete trend reversal. Hit, big reaction, it broke, then it broke to the upside, retested, held. So it held many more times than it did break, right? Looking at this example, we see 1, 2, 3, 4, 5, 6 times that it held as structure, 2 times that it broke. So it's 3 times as likely to hold up as it is to break, especially on a first touch. So now when we look at the weekly time frame, the weekly created a shark fin. So we have a weekly shark fin at a monthly level of structure. And we go to the daily. Our daily, let's look at this one close. We look to the left, daily structure that we're in. We essentially had a liquidity hunt or liquidity grab / stop hunt, however you prefer to call this move, where you have a slight dip through structure and then it ultimately comes out to respect it. But our daily made a shark fin and then came a little bit lower and made divergence. So monthly level of structure, weekly shark fin, daily shark fin turn divergence. The 4-hour actually also gave 4-hour divergence at that initial bottom spot, which would have been great for a trade. But again, if you are not somebody who wants to be trying to guess the lower lows, the safest thing to do, because even that had very high probability because you had so much confluence, weekly, daily, 4-hour, extremely likely for it to flip. But again, if you miss that trade, or if you just don't want to take the very low against a very bearish market, you wait for this. You draw a trend line, and you will typically always have these confluences. You'll usually be able to get a bearish trend line that trend has been following. You see your 50 moving average on the 4-hour. And note any structure that is nearby. For this example, I did note that there was a inverted head and shoulders. If our 50 MA was down there, I would have taken that trade from that spot. But I wanted to also see the break of the trend line. We really want to see the MA clearly broken. A full candle has to open above and close above in order for something to be considered breaking and not just a fake out, a wick out. So this trend line broke, the 50 MA broke. We rose, and then when we had pulled back, it was a clear break. And then we had several, so I wanted to note, several candles that are above the MA, several candles, that went up, came down before it came to retest that trend line, the moving average. I did not get in at this spot where it retested the trend line. I got in at the retest of the moving average. So if I scale down, I got in on the 200 MA on the 1 hour. This is how that looked. And now I'm going to go show you. See, 0 TDI confluence on this trade. But the 30-minute and the 1 hour both had a shark fin. The 30-minute was a shark fin at the 200. Your 15-minute was shark fin turned divergence at the 15 moving average. This trade had almost 0 drawdown. It had, I want to say, maybe 5 pips or so, 5, maybe 6 pips. But essentially, this trade works out, again, very well. Why does it work out so well? Because it's continuing the higher time frame move. The weekly or daily has showed that there was a reason for a reversal. In this case, the monthly time frame played a role. Monthly structure, weekly shark fin, daily divergence, 4-hour divergence. It had all the reasons in the world to flip. So this break retest is the continuation without taking a guess. Without having to guess, is this the lower low? Where's the lower low? Because we're dropping. If we zoom out and look back, Euro USD was trending very bearish, right? Kept making lower highs, kept making lower lows. Plenty of opportunities to get stopped out or broke even if you were lucky trying to just buy the lower lows. You don't want to do that. Typically do not want to try to guess and buy the lower lows. You want to trade off of structure that has already been created. So that's why this break retest trade will work out so well, because you have higher time frame confluence and you're only taking it if it has higher time frame confluence. I would not take this trade if the daily or the weekly did not have shark fin / divergence. If there was no shark fin, no divergence, we would not trade the 4-hour 50 unless it was hidden divergence. You are only taking a break retest of the 50 if a higher time frame had confluence, because this is a continuation of a reversal. At a recently shifted trend, you're getting in at that earliest possible spot. Sometimes this will even line up as a fib level. This one was a perfect 0.5 pullback. So you'll often get a fib level, a trend line, structure, break retest of the 50 moving average. The true requirement is that the daily or the weekly, and it could be the monthly, has to be coming off of strong confluence, shark fin, divergence, shark fin at a moving average, trend line, structure. There has to be significant reason for the trend to reverse. Because picture in your head, like a 4-hour isn't going to just completely shift, reverse, go in the other direction, 300, 400 pips for no reason, just because your 4-hour hit something significant. If the trend is going to reverse, 9 out of 10 times you will see it happen on the weekly, on the daily, on the monthly. The higher time frames will position themselves where they get to structure, trend line, they will form shark fin or divergence, and you'll start to see the ripple effect of the time frames. But just because your 1 hour, 4 hour, 30-minute are ready doesn't mean you're going to see a massive daily reversal. That's the way you have to look at it. And that's how you're targeting your take profit. Your take profit, if you're getting in at a 4-hour 50, you are usually taking that to the 4-hour 200. It could be that the 800 is closer. You could take it to that. The only other option is, because the daily is divergence, the take profit on this divergent move, we are expecting this to actually rise up to that daily 50. Although if we start to consolidate, we know that our daily 50 will come down lower. And you don't really want to stretch it too far and be greedy. This setup typically gets you 1 to 3, 1 to 4, 1 to 5. Most of the times I'm targeting that 4-hour 200 as the take profit, especially if the daily 50 is a bit out of reach. In this example, we have to break through some serious structure in order to get up to that daily 50. So although I would not ever sell Euro USD until that daily 50 gets hit, because I understand the move that it's in. It is rising off of the monthly level, off a weekly shark fin, off a daily divergence. So until the weekly 50 gets hit, until the daily 50 gets hit, our weekly 50 actually gets hit first. And then our daily 50 is right above it. They're both actually in almost the same area. So there's going to be a strong confluent sell when that area gets hit. So until that area, I would not sell. For buys, I want to be out way before that area gets hit. I don't want to roll the dice. So I'm pretty happy when I get a 1 to 3, 1 to 4, 1 to 5, because I have a pretty high win rate overall. So I don't need a super high risk to reward. And also targeting realistic levels like 4 hour 50, 4 hour 200. It's very mechanical and very easy to backtest. You locate daily, weekly moves. When you find areas where there's significant confluence on a higher time frame where a trend could reverse, where it makes sense for a trend to reverse, you go down to that 4 hour and you look for when it breaks and retest that 4 hour 50, and you take it to that 4 hour 200, and you can play around with the idea of, do you want to take profit there, or do you want to take profit at the daily 50? Because if your daily is divergent or daily is a shark fin, ultimately the TP for that move is the daily 50. If you are able to hold it, that may take much longer to happen as well. And like I said, you don't want to see a 1 to 3, 1 to 4 float back and become a break even. That is why I stress the importance of partials, and I stress the importance of not trying to be greedy. A 1 to 3 is amazing. If you have an 80, 90% win rate and you're hitting 1 to 3s, you will be extremely profitable. Even hitting 1 to 2s, 1 to 1s. If you trade with a 1 to 3 or 1 to 4 risk to reward, you only need like a 20, 25% win rate to actually be break even. If you have a 30% win rate, meaning you win 1 out of every 3 trades, you will actually still be profitable. So risk to reward is a huge factor. Don't just look at what win percent is, your win rate, but look at the risk to reward. They are directly correlated. What is your average win? What's your average loss? If you lose half the time, but your wins are 4 times or 3 times as large, there's nothing wrong with losing half the time, because your wins are making up for it. Win rate alone is not a measure of anything. It goes hand in hand with the risk to reward ratio. So now let's look at a Euro JPY trade that was called in the TSA Discord. This one was from a couple months ago. I want to say from June or July. Same concept. Let's go on our weekly time frame. Weekly had a shark fin at a higher high. Notice that these trades, again, we are not trying to guess the high or guess the low. You're letting it play out. You're aware of it. I'm aware that the weekly is a shark fin. Maybe it was even a shark fin for a couple weeks while it was forming. But until that finally drops, my eyes aren't really going to look to sell this because it is so bullish. Weekly shark fin, scale down. Daily created, daily shark fin turned divergence. So you have a reason to drop. Essentially, you might even drop down to that daily 50 based on daily divergence happening. Weekly shark fin, daily divergence. 4 hour. So this is the key factor in what you're waiting for. You identify your area of structure and your 50 moving average. And I could say, okay, here was resistance that turned into support. That support failed to produce a higher high. Then, so that's indicator number 1 that trend is changing, right? When you have a bullish market, resistance should be support. So when you see resistance become support and that touch fails to create a higher high, it fails to create that higher high like that, that's letting you know that the momentum is slowing down. So indicator number 1, we notice is here. We failed to create that higher high. Then we came back down to touch the 50 moving average. The 50 moving average failed to produce a higher high, failed to reach an equal level high. It actually created this, it wicked out, letting us know that there is some major exhaustion going on in this area up here. And then we broke support. So 1, 2, 3. 3 things that price action showed us for this trend coming to an end. And of course, the other confirmation that we really know is daily shark fin divergence and weekly shark fin. You cannot argue that that thing was going to drop when you have all that happening, and then you get the break of your 4-hour support, break of your 4-hour 50. So the moment in which I had posted this trade was when it was dropping down here. As soon as that support level broke, eyes go to the 50, eyes go to that area of structure. Also, round psychological level, 157,000. You will also, like I was telling you in the Euro USD example, you will usually also have a not perfect, but you will usually always have a 0.5 or 618 fib level that lines up with that break retest of the 4-hour 50. And note that some examples, it will break the 50 by a little bit. Other examples, it will stop a hair short of the 50. So you have to take into account the other confluences: quarterly psychological level, support, resistance, your structure zone, your fib levels. You want to identify all of this. If you did identify everything, you would have got in based on structure. You would have got in based on the 0.5. You would have got a perfect entry if you took it on the 618, or you would have just missed it, right? If you waited for the MA exactly, you would have just missed it by about 10 pips or 11 pips. This is why I personally love to take 2 trades on every trade idea, because I take one at the bottom box, one at the higher box. And like I mentioned earlier, again, repetition. Daily, weekly has shark fin or divergence. You see the 4-hour 50 break. You plot your trade up on your 50. You take it to the 200 on that time frame. That is the safest way to take it. Taking it to the daily 50 is a little bit, sometimes it gets there, sometimes it doesn't. It's not guaranteed. Let me play this out and see. So it would have ultimately broke even, because you certainly would have had a stop loss to break even after you were 300 plus pips in profit. And this is what I mean. You wouldn't want to watch a 1 to 4, a 1 to 5 reverse all the way back and hit your break even because you were being greedy trying to hold to the daily 50. That's why I don't really stress holding a break retest of a 4-hour 50 all the way to the daily 50. You're getting in at that 4-hour 50. You take profit before that 4-hour 200. And this trade still would have got a 1 to 4.5 risk to reward. These trades do not happen often because weekly and daily shark fins don't happen all the time. But when they do, if you get that break retest of the 4-hour 50, the trade works out almost every single time. And the ones that don't will almost just about all of them will get you a break even. They'll start to play out several candles, a day or two goes by, it comes back. Again, can't stress the importance enough of taking partials. Don't overtrade because you will not get confluence like this on a daily basis. You cannot force these types of moves. You really have to wait for them to come to you, because you have to wait for your higher time frames to line up. You have to wait for the reversal to actually happen. Sometimes it looks like it's lining up and market just continues on and on. So you do have to be patient, disciplined, wait for that break, catch that retest. And now for the third example, I am going to show you this break retest that happened last 2 months ago. Let's do our higher time frame first. Our weekly was at an area where, just looking at this now, I get a couple different trend lines that come to mind. This is one. Yeah, this is the most clear trend line in my eyes. There's a trend line, and we are coming into an area of resistance on the weekly time frame. Nothing super significant yet. Now let's go to the daily time frame. Our daily had a shark fin and then had this one candle pullback, this one candle that dropped, and then price rose for the next 3 days, and that rise created divergence. TDI went down, price kept going up. We were also at a psychological level of 35,750. We know how well psychological levels work with US 30, NASDAQ, and gold as well. They love quarterly psychological levels. Just that tip alone will be enough to make you pretty profitable if you start timing your trades with quarterly psychological levels. Don't just take my word for it, backtest it and find out for yourself. So daily divergence. Again, we have our reason now for our trade. And see, here's a great example of a daily divergence that did what it's supposed to do, which is hit the 50, which happens 8 out of 10, 9 out of 10 times, your shark fin or your divergence will get you to that 50 moving average. That was why this trade was able to be held to that area. If you did hold to that 50, you would have got a 1 to 5 risk to reward. If you took profit at your 4-hour 200, which we're going to look at, you would have got a 1 to 3, which is still great because, again, these trades work out almost every single time the criteria is met. You can't be taking a break retest of a 4-hour 50 if it directly contradicts a daily move, if it directly contradicts a weekly move. You're not going to trade against a weekly shark fin and try to get in a 4-hour break retest. You're not going to trade against daily or weekly combination of confluences. You have to be trading with it. You have to let that reversal happen, and then you're looking to get in at the retest. So I zoned out the box of structure that we were looking at that included the 50 moving average. When you would look to take this trade would be approximately right here, which let me do jump to once our level of this, once this 50 broke. So immediately that 50, once that 50 breaks and you can zone out that structure right around the 50 moving average, it's also at a 35,500 quarterly psychological level. The top, it reversed at a 750 level. Our 4-hour 50 is at a 500 level, both quarterly psychological levels. Look, if I draw a box right here, why did price react off this 4-hour 50? I shouldn't say why. This was a hidden divergence, not to get too off topic, but right around this level is a 35 to 50 level, as well as a 50 moving average and hidden divergence. Super great trade. But all of these levels are quarterly psychological levels. Resistance, support, the MAs. When you get dynamic support resistance, where it's support resistance at a quarterly psychological level or with a trend line, the odds of that move playing out are just about doubled. This is why I do not trade off of one confluence. I don't trade just off of structure. I'm only trading off of structure when there's TDI, moving average, trend line, fib level, higher time frame confluence. There has to be other things present or else it's not really worth taking the trade. So this is where our eyes go to the 4-hour 50. And then as these candles played out, you got it triggered. Where's our 4-hour 200? Okay, our 200 is still a ways down. Originally, this would be your take profit when you enter the trade, because that's where the 200 was. As it trailed up, then you would be able to, you'd have to take into account that 200 is not where you originally thought it was, and consider taking profit a little bit earlier than you thought. This one came back up to the entry. I want to say twice it happened, 3 times, 1, 2, 3 times. So there would have been potential to re-enter if you broke even, because these are 400, about 500 point swings. And now if you notice, guess what is at this support? A quarterly psychological level of 35,000, 35,000. I can't really stress it enough, but that alone will make you a much better trader if you trade indices and you aren't already using it. I use it for Forex pairs as well, but it's especially prominent in the major US indices. So as I said, that 50 starts, or not the 50, the 200 starts trailing higher. Now this trade did originally hit the take profit anyway, but I would have considered getting out at the 200 just because the MA trailed up. Ultimately, it would have been safe to hold here because the daily 50 was also at this level. But you don't really want to stretch it. Again, it was perfectly fine at a 1 to 3 with that same 150 point stop loss. So now the best thing you can do if you're watching this video is to backtest this. Use the replay feature, go on the daily, go on the weekly. When you see those higher time frames make shark fins, make divergence at areas of confluence, like shark fin at a trend line, structure with divergence, when you're basically seeing a reason for a higher time frame move to play out, because again, you're never just going to look at a weekly moving average and a weekly shark fin and say, and click the button just because it touches the weekly. No, you're going to scale down. You're going to look at the lower time frames, and sometimes you don't get in at the very low. It's perfectly fine because you want to see if that move's actually going to play out. let it create new structure. Let it create a new low, a new high, or the support to be broken, resistance to be broken. You need that structure to start to form to help confirm your trade. When support becomes resistance, resistance becomes support. So replay feature daily, weekly. When you see those moves happen, immediately hop to your 4 hour and watch it play out and watch the candles, watch it break the 4 hour 50. And when it comes back, if it comes back, because sometimes daily, weekly moves are so strong, it just smashes through everything. But when you get the move where it breaks through that 50 and when it pulls back, you draw up your trade as exactly how you would take it. From the 4 hour 50 to the 4 hour 200. Safest way to do it. That's how you want to backtest it, because really the lower time frames don't matter too much, but sometimes they have confluence, sometimes they don't. It's really just looking at daily, weekly, 4 hour. Monthly could be involved, but it's not a necessity. Daily, weekly, necessity. 4 hour is your entry time frame. So if you like this video and you want to see more videos like this, please subscribe to my channel, leave a comment if you found this helpful. And I trade live using this entry with the other confluences involved in the strategy, and it works out amazingly well. So if you find it helpful, or if you're trading and have had some success with it, definitely leave a comment. If you guys have any further questions and you need to reach out to me personally, my Instagram handle is @thejoecaruso. Feel free to message me on Instagram. I will get back to you. I am reachable, unlike a lot of other guys in this industry. I will answer you. I will see your question. I will respond. So until next time, I hope this video helps. And thank you guys for watching.